about or when is it the best time to rent versus buying, which is interesting to quantify it.
Yeah. So it's not always the case where renting's better, at least in as these people, the researchers see it. The graph tells a story, I think, better really than anything else. It's better to buy than rent from around 1982 to 2000. And then after Y2K, better to rent than buy. And that lasts till 2010. So you can see there's 20 years. And then a 10-year period, there's a real big spike. That's the housing crisis, where it's better to rent than buy. And finally, from 2010 to 2018, actually better to buy a home than to rent a home.
Which is, pretty fascinating because, it makes sense because housing prices, obviously went in the crater after the great financial crisis.
Yeah.
But, 2014 to 2017-18 was one of the really strong rent growth and a great time to be a multifamily investor. But it was still there were still a ton of renters, but it technically was still a better opportunity to buy. And now we're seeing even more demand than we saw in that period. But the economics and the math make it's better to rent. And that really started, as you said, 2018. It's spiked. And I guess this is obviously directly correlated to home prices.
Yeah, I think we spend so much time thinking about rising rents and rising apartment asset values, but home prices are making just the same moves, if not faster.
Oh yeah, I think faster. Yeah. And I think the people don't see the rent growth as sustainable when they look at it in a vacuum, which I think it's obviously often examined in just a real vacuum of, rents have gone up, 10%. That sounds crazy. It's like, well, but if everything has gone up 30 or 40%, how crazy is it? Especially when let's just look at housing. Housing has inelastic demand. You always need a place to live. People need to put shelter over their head. And now on the margins, more people are going to be renting. And then this is combined with the fact that we just don't have enough rental stock, whether it's single-family homes or apartments.
I just dropped my pen because I got so excited. I think that the length of these trends is interesting too. It's not like we won't see these coming, and it's not like
we're at the beginning of this trend,
and we're just basically from 2018 until now, and probably until for the bulk of the 2020s, it's going to be better to rent than buy if history has anything to say with it.
I think that's a really good point you just made there, Matt, is looking at kind of the length of periods of these trends. And just again, this is going back to 1982, but essentially from 1982 all the way up to 2000, so that's 18 years, it was slightly better to buy than rent. So that was a 20-year cycle. And then from, call it 1999 to 2010, so that's about a 10-year cycle where it was better to rent than to buy. And so let's extrapolate, let's say that's a trend.
Yeah.
Not that the economy's going through crazy stuff. So who knows? But all the forces seem to be pushing in this direction. So if the trend of being better to rent than buy really began in 2018, we've got a decade. So, or at least, so really 2028 we're looking at for where at least the equation of renting makes more sense than buying. But that doesn't mean that when that switches, multifamily ceases to be a good investment, because we've seen that multifamily was a great investment during the last cycle where it was skewed towards buying.
And I think so also, you think about what you see in this graph is a huge spike around that really peaks where it's better to rent at 2007 at the great housing crisis. That's the biggest peak. That was a housing crisis, and it still took 5 years for it to go from that peak to the bottom, to where it was better to buy than rent. Yeah. And so, there are years, even like the biggest crisis that we've seen, it takes years and years for it to actually move things in that direction. So it will be, I think that I do think that I think that we are at the start, and you can see this rising from 2020 to 2021. We're at the start of a big rising trend where it's better to rent than buy. And I don't think that it's going to stop for at least 5 years. Yeah. But I
think that'd be safe, because I think, so many trends have been accelerated. So let's say that, okay, let's say the trend's been cut in half. So we've got another 5 years of where it's absolutely better to rent than buy. And then that doesn't necessarily mean it's a bad environment after that.
Yeah. But you still have that 5 years to go back, and then it'll be 5 years to break even. So that may be,
fascinating stuff, man. So what do we have next? We got a good article from Forbes. Counterpoint on rent growth.
So that was my title. The headline title is, "Will your rent keep skyrocketing? Not if this billionaire is right."
Are we going to trust this guy?
I do.
You do. Maybe we should.
Well, okay, so that's what I want to get into. It is okay. This billionaire thinks that rent is not going to keep skyrocketing, and obviously we've got opinions, and we don't think he's right. But it's still worth thinking about in what ways could he be right?
Yeah. And that's a good point, because let's not sit in an echo chamber and say everything's good, rent's going to keep rising, and multifamily is the best. Trying to really making these conclusions with evidence. But anyway, what is this? What is this billionaire? What is his opinion?
The crux of this article, which is really actually kind of more of a short profile of Marvy Finger, who's a Houston-based tycoon or magnate, however they describe him. But he sold $2 billion of his portfolio, which is equal to about 33 times the expected 2022 net operating income of $60 million. Which I think I did some math, and so 1 over 33 is that a 3% cap rate?
Yeah, it makes sense. Probably.
So, and
that's not. I mean, sounds about right.
And you know what? That's what I did. I did a little some light unscientific Googling, and they said, a couple sources said that Houston rents were on average about 5%. Maybe Class A rents were about 3.75 on the low end. And so, honestly, 3% cap rate doesn't seem that unprecedented here. And I bet that the size of that portfolio is also very attractive. They could get $2 billion worth of assets all at one time.
Yep.
That's a lot of time. And that I think that Graystar, which is the buyer, was as excited about this as Marvy Finger was. Before we get to Marvy Finger's reasons for selling, the article does note that the buyer for many of these properties, which I've said is Graystar, was as enthusiastic as Finger. And it's because you've got a lot of rent growth, a lot of investor competition, and a whole lot of attention in general being paid on the investment markets, particularly in the Sunbelt markets. So, it's not that surprising that there was such an eager buy.
And what are his reasons for wanting to sell? I mean, what's the why does he think that rents will cease to grow just because they're high? Or?
Finger thinks that the multifamily market is headed for a correction, specifically because he sees the potential for an oversupply.
He is in Houston.
He is in Houston, and that's true. And he is in a lot of these Sunbelt markets that, when I think of supply, I'm thinking of long-term trends in the nation, but really where the rubber hits the road is individual markets.
Yeah.
And that's kind of where, Spencer, whenever we have these reports, you zoom in on the individual market supply.
Yep.
How many units have they brought online? How is that in proportion to their, to the housing stock, or how many apartment units are already on the market?
Yeah. And
those numbers are particularly important, because if those get out of whack, then that's going to have an effect on rent, on demand, on occupancy, and so on.
Yeah, I would. It can't be underlined enough how you have to be granular in terms of which markets you're looking at, and really the submarkets, and looking at supply and demand, because Houston is one that is seeing a lot of growth. Mm-hmm. It has, and it probably will see growth, but it's not necessarily as high as a lot of other markets. But the amount of supply that's coming online, I don't have the figure in front of me about what the supply compared to the percentage of current inventory versus the amount of absorption that's coming online.
Yeah,
but it's at a level where it is concerning, where you could see some oversupply in some select markets. So you'd see some softness. Is that going to lead to a crash though, or is that just going to, because or is it more just maybe they're not going to hit the returns that they're going to want to hit? And so I think probably Graystar's making probably a good move. There's some other markets that I'm more excited about than a Houston, but Houston's been a solid market and most likely will continue to be. But there are just those risk factors in some markets, which a lot of the Sunbelt markets are. That it's just a higher risk and potential higher reward, but definitely higher risk.
Well, and part of it is your local market knowledge. Maybe Marvy Fingers.
Maybe he knows something. In Houston.
Knows a little bit. Knows the construction plans that are being planned. Maybe they're not permitted yet, but a lot of builders might be drawn to the same markets where he has these properties, and so he's he's selling on the rumors basically, and that will kind of harden into a real oversupply. But that's again specific to these markets that he has his investments in. You can't make that blanket statement about oversupply because we're in a housing affordability crisis.
Yeah.
There's way too much demand relative to rent, and it's making things very very tight for home buyers and renters. So I think that yes, he could be right in here, but the way he's right is within specific markets.
He's also, he's obviously an older guy, older gentleman, probably looking at retiring if he's not retired already, and he doesn't need to worry about it.
Yeah,
I mean, and that's another thing that we're seeing a lot of owners saying. Maybe they want to continue to invest in real estate, but they don't want to operate. They don't want to own. They want to be more passive. And maybe this is a way of him saying, like, look, things are just crazy. I mean, look at the guy. He's definitely an older gentleman, and he's got $2 billion. He's going to put it under the mattress or wherever he wants, whatever he wants to do with it. But he doesn't need to do anything. He doesn't need to be allocated the $2 billion in real estate. And he may have another, I don't know. He may have another $1 billion in real estate. He may have another $5 billion. I don't know what his net worth is.
He definitely says it's half of his portfolio, and he's thinking that the other half is the good half.
Yeah.
So
and maybe that makes sense. So
everything.
Nice pruning of the portfolio. I think that makes a lot of good sense. And again, I think it's really I'm glad you included that, Matt, because it's important to look at the other side, and we do get a lot of opinions, and usually not necessarily based on a lot of data or evidence, but just things are crazy, and I don't want to get in the middle of.
I liked it too. How it describes equal excitement on the buyer and seller. It's like a capital. It warms the hearts of capitalists everywhere that this $2 billion transactions. Everyone's happy.
Everybody's happy. Yeah. That's what you want to see.
So,
okay, Matt, not everyone loves remote work. Yeah. The remote work revolution, though.
Yeah. When it comes to remote work.
What's going on with that?
So the total share of remote workers has dropped from 51% in April of 2021 to 44%, I think, in December of 2021. At the same time, the share of workers who expect remote work in the future, either remote or hybrid work, pretty much remains stable. It was 77% in April of 2021 and 78% in December 2021. So people expect that it's going to be there. I don't know if that's really a good measure of what is actually going to happen, but it may affect people's, if in a tight labor market, the expectations of potential employees are important because now they have a little bit more leverage, and now they can kind of, dictate a little bit more about what the working situation is going to be.
I think the fact that 45% are expecting some kind of hybrid environment, and there's more and more talk about 4-day work week, 3-day work week, or just flexibility of like, hey, all right, I don't need to be in the office today.
So this is, I think, the most powerful finding that they have. Now, they have some stuff about remote workers. Like they have a line that says like, oh yeah, when individuals flooded once sleepy towns, like we don't really see that. What we saw during the pandemic and what we may continue to see is people moved from close to downtown to out towards the suburbs,
looking for more space
within the same city. And I think that totally connects with the idea of hybrid work, where you're still tied to your workplace. You got to go there, but because you're going in there 2 or 3 times a week, you don't have to, maybe you can afford, your sanity can afford an hour drive rather than a half-hour drive.
Well, and you trade it out of your 2-bedroom, downtown apartment to a 3-bedroom suburban apartment that maybe you're paying the same in rent, because typically CBD rents are a little bit expensive. You're getting a nice apartment out in the suburbs, more space, maybe you're paying the same, maybe less, maybe a little bit more. You're getting, you've got a room for private office now, or you're just spending more time at home, so you've got room to do more room for activities, basically. And,
it's true.
And that's something we're looking at. And that's a big change because we, in the past couple of years prior to the pandemic, we didn't want to see a ton of 3 bedrooms, or especially not 4 bedrooms. That's more student housing. But unless the area had a lot of families, we'd really want to see studios 1s and 2s, and really 2s. But now we see some 3 bedrooms, and the pricing on the 3 bedrooms kind of keeps bumping up, and there's a lot of room to grow.
Is that 3rd bedroom usually an office, or are they?
It's either a family or it could be an office. It could be some extra space, but just the demand in general for 3 bedrooms. And I think that also relates to housing affordability, that people aren't able to buy a home. Millennials who are having kids and forming families, they want the extra space for the kid. They need an extra room. They need a nursery. They're having another kid, or they've got the nursery and they need an office also.
Yeah.
And homeownership is unobtainable, and so they're looking for a good rental option with more space. And so we've got a project under
time specific kind of to this moment.
Yep.
Whereas I think a lot of and they talk about the attitudes for different generations.
Yeah.
I think a lot of this is age based, not necessarily like the inherent characteristics of each generation, but it is still interesting. Now, 48% of millennials are into
do you think that's because we're just like millennials are entering kind of peak like earning years, like they've got a little bit of leverage, they've got a good decade or so of experience, but they're also like, hey, I want to work from home, I want to get a little bit of power here.
Yeah, that makes sense.
The boomers and Gen Zs are like I've been doing this for decades, like I'll just keep coming into work.
Yeah.
And
so just to summarize, we've got this graph up.
But the Gen Z, I'm curious about the Gen Z. They're not working at all. They're kind of at the anti-work movement.
Yeah, you'll see about their desire. So this graph that we have right now, it represents the share of workers in each generation that are in remote working jobs, and millennials are the highest at 48%. Everyone else, boomers, Gen X, Gen Z, they're around 40%. Now, what's interesting is the following graph is how interested each generation is in remote work. How desirable is remote work to you? And starts at 62% for boomers, and then it goes down from there. 54% of Gen X, 51% for millennials, and then 36%, which I think that's the most even more relevant than the boomers really interested, are the Gen Zs. 36% think that remote work is desirable. They're really not interested. They want to go to work.
That's probably good. That's a good thing.
Yeah, and that ties into a little bit more of what we're going to talk about with Gen Zs and urban markets as well.
I was just thinking about that. That's a great connection. Well, why don't we just pop right into that? So Gen Z renters, Globe Street had a nice
it's got a good headline there.
Good headline.
I'm on the older side of the millennial generation, and I'll admit I identify a little bit more with like the laid back Gen X stereotype than like the earnest and idealistic millennials, which that's why I kind of like Gen Zs. Gen Z's a little more practical, I guess. This is according to stereotypes, but here's where I'll argue. I think a lot of this is due to stages in life. This
100%.
Is what young people like. This isn't like an inherent quality of Gen Zs. It's like, oh, there's so much difference. Like, nope, they're just younger than us, and they're into what young people are into.
I think that's a really good point, and yeah, it's what young people probably always have been into, given like the current times, but. And everyone thinks it's new. I heard a Gen Z saying something, and saying, our new generation, younger generation, we're just much more liberal than past generations. Like every young generation is liberal. Like that happens. That's like been going on.
So like Roman, you can see 8-year-old like Roman.
Yeah, idealistic, young
speeches,
kids, and then all of a sudden you start paying taxes and see what you wanted to do not work, and you're like, okay, maybe there's not. I'm just going to look at my philosophy a little bit differently.
So Gen Z, just to summarize, then the Zoomers that they call that people call them. I don't know if they're calling.
I don't like that's I'm not.
Yeah, it seems like pejorative.
Is it because it just rhymes with boomer, Zoomers, and boomers?
Oh yeah, I think so.
That's yeah.
They're the young people that are moving into cities and supporting a real revitalization of urban apartment markets. On the face of it, I think this is a lot more consistent with the age, again, than the particular generation. And it makes sense. They're moving out of their parents' houses. They're looking for places where they can find jobs, entertainment, other people their age. A typical Zoomer probably doesn't have any kids yet, doesn't have enough money to buy a home, and fits in well with what they want and what they can do. So they go to the city.
Yep.
And they're more interested, again, like that past thing. I really think that this is one of the more powerful connections that we found this week, is this connection between they like the workplace, and they're going to where the workplace is. That was a big surprise
to me.
Yeah.
And I think that is going to, as we're going to talk about, is what is that going to do to major employment centers, the CBDs that have been hit hard.
And so you get the specific numbers for the individual markets in the Rent Cafe article, which actually Globe Street summarized a little bit of the Rent Cafe, but I liked the article in Globe Street. It got right to the point. Now, the Rent Cafe article, is that Gen Z renters are giving big cities a glow up, which is a millennial.
What is that? A glow
A
up?
glow up is like when something is really good. It's so good that it glows.
Okay, cool. That's fun.
I think that's a millennial term, actually.
Is it?
Maybe not. I don't know.
I don't know.
The cohort of Gen Z renters is growing rapidly, and of the 3.2 million applications for apartments analyzed, 27% were from Gen Zers. 45% are still millennials, but the change in share, I was mixing this up. The change in share, Gen Z has grown the biggest. It has grown 21% compared to millennials. It's actually shrunk by 8%. And all the other age brackets are shrinking shares of renters. And it's really Gen Z that's growing the fastest.
And I think, as you said, it's more life. It's less generational as it is just what stage of life you're in. And for millennials, again, they're having kids, trying to buy homes. Looks like 8% have been able to buy a home. The rest haven't. Yeah. But it was expected that number was significantly higher than -8% for millennials. Yeah. And if you look at a demographic breakdown of population growth by age bracket, in almost every single market, you'll see a significant decrease over the next 5 to 10 years for that millennial, that kind of 25 to 35, which is definitely a big chunk of renters. And it's just because millennials are getting older.
Yeah.
But what everyone was anticipating is that they would all just have families and buy a house. They can't buy a house.
Yeah, so they're declining a lot slower than expected.
They're declining a lot slower, but they're definitely, there definitely is still decline, which is to be expected. Yeah. But man, that's a lot of new Gen Zers. It makes you think about when you're looking at apartment acquisition, real estate investing, when you're trying to cater towards a younger demographic, Gen Z, what do they want? We kind of sort of figured out the millennials. Is it going to be the same thing? Or, what kind of, I'm just thinking what kind of amenities that we're going to need for the Gen Z.
So Apartment List says that Gen Z is really interested in, because they're the first generation born and raised on the internet, they're going to want fast internet connections. And honestly, I think that's too easy. I think that they expect fast internet connections, and they're using this as the reason for they're speculating that Gen Zs want to go downtown because the internet's faster. I think, honestly, you can get a fast connection fast enough in the suburbs or in downtown. And I don't think that is a meaningful difference. I think really it is a stage of life. They want to meet, they want to be where other people their age are. They want to be close to their workplace. They want more employment opportunities. This is the time when they've got a lot of free time, a lot of energy.
And is that really any different from the millennials?
Exactly.
That's the same thing. Yeah. You're out of college, you want to get things going, and you want to start your career and have some fun. But just quickly, let's just look top 20 cities for Gen Z renters in 2022.
Oh, this is interesting.
Yeah. So Davis, California. Okay, these are all university towns, pretty much. That makes sense. Gen Zers, graduating high school, going to college. So it's UC Davis, I assume. Boulder, Conway, Arkansas. I'm not sure what. Lynchburg, Virginia, Bloomington, Indiana. So these are Kenosha, Wisconsin. These are many of these, not all, but many of these are university towns.
Yeah, what's interesting is that this doesn't map completely 100% to the largest universities in in America.
That is true.
So there are some. I think that there definitely are some cities where it's more desirable for Gen Zs to live there, and it's not just. Not just they're going to college. Maybe it is better for young people. Yeah. I remember we were reading last year about some places in like Louisiana that were very attractive for Gen Z renters. I'm blanking on the name, but it's not always the college town, and it would be interesting to look at what proportion of this increase is due to education. I'm assuming it's mostly
education, and then where are the cool jobs, and so you graduate, university or college or whatever, and you're like, okay, let's go to New York. Let's go to California. I want to go to a big city where there's a lot of jobs and I can, work at, a firm that's right in the center of the industry. I moved out to New York after school. I know a lot of people moved out to California, moved to Texas, Miami, wherever it might be. It makes sense. You want to go to some place with a lot of opportunities. It's going to be fun, trying something different.
Yeah.
I think that makes sense. the next decade or two after that, we shall see what happens. Let's just look at a couple of these charts. What do we got here?
And while you're looking at these charts, I did want to note one of the things that was brought up in that Fortune article about Marvy Finger is they talked about the potential decoupling of people that were in roommates, and I think that this might be applicable to Gen Zs. Is maybe they had roommates during the pandemic, and now they're like, okay, we're all settled, or they were living with their parents during the pandemic, which is probably much more likely for Gen Zs than others. They were living with their parents or living with extra roommates, and now they're kind of independent and they're ready to to strike off on their own. So that's going to
be some new demand that's going to really start trickling out. I don't know how much it's going to move the needle, but there's a lot of kids who've been living at home. They were finishing up school. They're not going to go rent a place when they can just go move in with their parents. I mean, I know handful of younger folks that are in that situation.
And I would have to look into this, but I would suspect that there is a significant chunk of college students in the past 2 years that were living at home and doing remote e-learning and instead of living on campus. And we're going to
I know a lot moved back to campus, but they were like, I don't want to live at home, but some definitely stayed at home, and I think that the recent graduates, I think a lot of those probably stayed at home.
Very good point.
You're going to work remote. And again, so Matt, back to one of these top graphs, the top 20 cities for Gen Z renters in 2022. Again, these are all major employment hubs. San Fran, Jersey City, Manhattan, New York, Philly, Boston, outside of D.C., outside of San Francisco, Seattle, Minneapolis, L.A. So, that's a lot of
big job places.
They're going to where the jobs are. And that's what we've talked about. Follow the job growth. Population growth usually lags the job growth. So focus on the job growth. You're going to be in a good spot. Matt, really great report. This has really got me thinking about not just the plans that we're going to do this year on acquisitions, but how are we going to shape these business plans to cater to the next generation of renters, whether it's Gen Z or it's going to be retiring baby boomers. And then just dealing with more millennials just being renters for longer. Kind of net, I think positive for multifamily. I think there's still a lot of just unknowns in the macro economy, as they always are.
I think everyone loves talking about Gen Z, the younger generation, and how they're, but millennials aren't going anywhere, especially when it comes to renting apartments. And we still got a huge housing demand. You can eat all the avocado toasts and download
Van
all your
life,
internet.
all you want. So the Gen Zers, they need to be downtown for fast internet, but the millennials are just in their van with the SpaceX Starlink.
That's right.
They don't need a little bit of speed. It's more the aesthetics.
Yeah. That's good.
All right, everyone. If you're interested in learning more about the multifamily industry, real estate, and the economy, make sure you're subscribed to the Gray Capital YouTube channel. But also hop on over to graycapitalllc.com/newsletter to sign up for the weekly Gray Capital newsletter. Packed full, way more reports than this. We've got, how many? You think like 24 reports? It's a ton of stuff. Not only articles, research reports, everything that's up to date to keep you the most informed, to help you make the absolute best decisions. We've got market updates, most recent, financing rates. Really, if you're going to absorb one piece of financial news and you're focused on the real estate industry, the Gray Report newsletter is what you want to do. In the Gray Report, this show is also available on the podcast, Google Podcast, Apple Podcast, Spotify, wherever you enjoy listening to your audio content. You can find the Gray Report to accompany you on any activity where you cannot look at screen to look at the graphs. Lastly, if you are interested in making an allocation to multifamily real estate in 2022, well, I would hop on over to Gray.Fund. If you are an accredited investor, that's Gray Capital's multifamily investment fund targeting stabilized multifamily properties, all 100 units and up in growing markets in the Midwest. Learn more if you are an accredited investor. You can just go to Gray.Fund right into your browser. It'll bring you right there. Download the deck. Schedule a call, and we are looking forward to partnering with you. Hope you enjoyed this edition of the Gray Report. Don't forget to like, subscribe, and leave a comment. We'll see you next week.